The stock market can seem very intimidating at first, and honestly, you're right to feel that way. Numbers constantly move across the screen, red and green colors flash up and down. Everyone is buying and selling something, and from the outside, it almost feels like everyone is speaking in some secret language. But the truth is much simpler than you think. Think about it this way. The stock market is simply a place where companies raise money to grow, and investors try to become partners in that growth. See? It's that simple, my friend. If you trust a company and have money you're willing to invest, you buy shares of that company. If the company grows, you benefit from your share too. Of course, as long as fate doesn't decide to ruin your plans. Ha 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 ha. The stock market is like a roller coaster. Some people are terrified, while others enjoy the ride. If you learn how to manage it properly, you'll understand how the system really works. You can use AI to follow stocks on a daily basis, but my advice is that AI is still quite limited when it comes to long-term investing. That's why it's always better to rely on your own knowledge and judgment. One of the most important things to understand is this. The stock market is not a machine that prints money overnight. I wish it were. Then we'd all wake up in the morning, invest our money, and applaud ourselves by the evening. But that's not how reality works. The stock market is about knowledge, patience, psychology, and discipline. Buying a stock alone is never enough. You need to know why you're buying it. What does the company do? Is it profitable? Does it have too much debt? Is its industry growing? Does it have strong management? These are the questions that matter. Investing based only on the price is like buying a car just because the exterior looks nice without ever checking the engine. It may look beautiful on the outside, but the inside could be full of surprises. To understand how the stock market works, you first need to understand supply and demand. If more people want to buy a stock, its price usually rises. If more people want to sell, the price can fall. It's that simple, but the impact is huge. Sometimes a company doesn't even announce particularly good news, yet investors believe its future will be bright, so the stock goes up. Other times a company reports excellent results, but because expectations were even higher, the stock price drops. In other words, the stock market doesn't only react to what's happening today, it also reacts to what people believe will happen tomorrow. And that's where things become truly fascinating. Because the stock market is also a market of psychology. Behind every number are human emotions: fear, greed, hope, panic, and impatience. For example, most people make the same mistake in the stock market. When prices are rising, they think, "I don't want to miss out," and they buy at the top. Then, when prices fall just a little, they panic and sell at a loss. A good investor, however, is usually the one who stays calm. Instead of chasing prices every day, they think long-term, because real profits are often made over time, not in a single day. Buying a stock isn't like pressing a button and seeing instant results. It's more like planting a seed. You have to water it, wait for it. Sometimes the weather turns bad, sometimes the sun shines. But those who stay patient are much more likely to enjoy the harvest. And by the way, don't forget this distinction, guys. The stock market and gambling are not the same thing. People often compare the two simply because they don't really understand finance. Talking without knowing is easy, after all. Sure, they may look similar from a distance, but they're fundamentally different. Gambling depends purely on luck. The stock market, on the other hand, is based on knowledge, analysis, and evaluating the true value of companies. Someone who truly understands the stock market is unlikely to remain in poor financial shape because they've already figured out how the system works. Remember this, the stock market doesn't make poor people rich. It makes wealthy people wealthier, and it can also make unprepared investors poorer. After all, there's such a thing as stock market speculation. There are highly volatile stocks for people chasing quick profits. One day they shoot up, the next day they crash, and people are left saying, "What on earth just happened?" But over the long run, quality companies, strong economies, and productive businesses tend to hold their value. That's why one of the biggest enemies in the stock market is impatience and lack of knowledge. Those who rush are usually the ones who don't truly understand finance, and those who let their emotions control them often make poor decisions. The stock market demands patience and knowledge. Then there's the mindset of, everyone else is making money, why am I not? That's completely normal. On social media, people usually show only their winning trades. Almost nobody posts a story saying, I made a terrible investment today. So from the outside, it looks like everyone is getting rich. In reality, almost every investor makes mistakes from time to time. The important thing isn't avoiding mistakes completely, it's learning from them. For example, putting all your money into a single stock is risky. Money management matters. You wouldn't want to put all your eggs in one basket and then act surprised when something happens to that basket. That's why diversification, planning, and patience makes such a huge difference in investing. So, what should a beginner do? Start by learning, not by panicking. Understanding the basics of financial statements, revenue, profit, debt, shareholders' equity can already make a huge difference. Then don't just look at a company's logo, look at its business model. Does it actually produce or sell something people use? Is its income sustainable? Does it have a promising future? Asking these questions will gradually make you a more informed investor, and an informed investor isn't someone who's only happy when the screen turns green. It's someone who understands exactly why they bought the stock in the first place. One of the best things about the stock market is that it teaches you to pay closer attention to the world. You hear a piece of news and immediately think about its impact. You start following the economy, comparing industries, evaluating companies. In other words, the stock market isn't just about money, it's a way of thinking. You begin asking yourself why people are buying a particular company, why they're selling another, which industries are growing, and which ones are falling behind. It transforms you from an ordinary observer into a much more thoughtful one. In the end, the stock market isn't a scary monster. When you learn it properly, it's a system that anyone can understand. It's not a promise of easy money, but with the right approach, it can teach you valuable lessons over the long term. And the most important lesson of all is this: the first step towards success in the stock market isn't trying to make money, it's understanding how the system works. Because once you understand the system, your decisions become stronger. And strong decisions are often what make the biggest difference.